Hey everyone, how's it going? Today's a great day, all things silver. We've got Chris Marcus here from Arcadia Economics, friend of the show. We love chatting with Chris. Whenever we want to know anything that's happening in silver, this is the person to go to. Now, most of you already know that, and you're here to see Chris and to hear Chris talk about specifically the last 2 weeks about like that the tightness and the volatility in the market. And even my crew, they're well known to Chris. But if you're new, check out his site, Arcadia Economics. Chris knows everything that's to be known about silver, and we're going to cover a number of things. We'll talk about deficits. We'll talk about physical trade of silver, what's out there. If we're attracting a lot of attention because of the trade itself, the divergence between gold and silver, you name it. We'll talk about industrial use. Who knows? We'll see where the conversation takes us. But we're always pleased and thrilled to have Chris on here for us to understand what's developing in the silver market, where we should be looking, and what are some opportunities lying ahead. So, Chris, how are you?
Andrew, I'm doing well. Thank you for the kind introduction. I'll try to live up to that. I don't know that I know everything or anywhere close to that about silver, but as you pointed out, certainly fascinating time in the world, and I'll look forward to digging in with you today.
Excellent. Well, we always love people that focus on niche and specifically on that, and really bear down on it. And this is a fascinating one because we get to talk about silver on a number of different levels, as the precious market, the divergence from gold, which is interesting, as well as that industrial use. And with the tariffs and what might be coming down the pipeline, most people know how much silver we need in solar panels. What's that going to look like? And of course, we've got the ever looming, what's happening in Mexico. Are we going to be pulling a ton of silver out of there as well? I'll let you kind of jump in and say, what do you think right now is the main focus in this market that you kind of see? And also that focus being, is there an opportunity there?
Well, I suppose obviously the main focus is the tariff war. It seems to be the main focus, not just of gold and silver, but pretty much all of the financial markets. And sure, there's a lot of opportunities. It's a tricky one when you don't know what that policy or rule code will look like tomorrow. Although, at least in the metals world, Andrew, I think something that a lot of people are wondering is, when does silver finally catch up? We've seen gold cross 3,500, obviously in record territory. Silver is still below its highs from 1980 and 2011. So we've seen a lot of divergence, perhaps none more so than last week. There was one day gold was up 90 or $100, and I think silver was down 60 or 70 cents, which I was thinking, gee, that has to be a record, because there aren't all that many days that gold has been up $100, probably somewhere it's been down $100 too to begin with. Yet to see silver move that much in the opposite direction, I'm pretty sure that we haven't seen that before. And so everyone's sitting there saying, well, when is silver going to move? And obviously they're correlated, and in many periods they're highly correlated. We have seen not all that long ago that when they move, it is not always necessarily at the same time. I'm pretty sure back during COVID that gold started moving earlier. Then it was a couple months later when silver had its big move, and certainly that's happened many times throughout history. Although, what is really at the heart of that? Fortunately, there is an answer to that, because if you look at the World Gold Council statistics for 2024, as well as the World Silver Survey, which just came out, I believe, 2 weeks ago now, and you look at how much gold and silver was purchased for investment and the price, Andrew, would you like to take any guess, or how much more one was the other in any capacity? How much? I mean, we hear a lot about gold being purchased by the central banks, which is absolutely true. And any guesses on any of that, Andrew?
I do know that I saw an article saying that in the month alone that China had purchased more gold than in the quarter before it. So that's just gold. Now, silver, I'm not sure. But I would suspect that because of the tariffs and whatnot, the divergence might be there because, the solar panel situation, and they're maybe not producing quite as much. But that's my guess. There's my guess.
Yeah, well, if you look just at the 2024 numbers, I think it came out to about $190 billion worth of gold investment. versus somewhere 5 and change for silver. It was a 34-to-1 ratio. So we've seen a lot of buying on the central bank level and by sovereigns for reasons that we can dig into, although I think many of them are clear at this point. We have not seen that on silver. Now, last year, and I think you and I may have talked about this before, how Russia announced in their draft federal budget that they were going to be purchasing gold, silver, and precious stones too, I believe. And I think they mentioned platinum and palladium. So we're hearing about that. I have not been able to find any numbers of how much silver they purchased. And again, that's different than saying we don't know to the degree that it's an indication that a sovereign entity is looking at silver, I think is something worth keeping an eye on. And actually, I don't know if you saw this last week. This was pretty shocking. It was a report from the Hindustan Times saying that the US and India are discussing their trade deficit.
Yeah.
And so US buys a lot more than we send back. And how are they planning on resolving it was having the US send gold and silver. So I'm thinking, and this is a couple of days after we saw that some of the metal that had flowed from London to New York is now going back out to China. And I'm thinking, I try to be careful with my headlines, not, say like silver is going to the moon to give anyone the wrong idea yet. Like this does seem like, does that count as a drain on the gold yet? If we're now settling our trade deficits with gold and silver.
Interesting. Yeah.
So yet with all that said, for the most part on the sovereign level, we're seeing gold. So gold really, especially in these past couple of weeks, has taken on a monetary premium, at least unlike anything I've seen in my lifetime, maybe back in the 70s and 80s. You had some similar comps, but that's what we've been seeing in the past couple of weeks, and why you see gold trading like it does, and even at times a wide divergence. Now, with that said, I think about it like this. If you go back 10 years ago and said, oh, well, one day we're going to get to the point where central banks are treating gold as money and describe the conditions we're seeing today, probably would have been hard to believe. So what I'm getting at is that things change, events in the world change. And when you're sitting there, perhaps with a large allocation of treasuries and looking at the current profile and realizing, well, I don't know exactly how, but at some point, someone is going to have to take a loss here. So you're seeing that. You've seen it change. The market conditions have forced people to change the way they're looking at it. Could that happen at some point with silver? I think it's certainly possible. Has not happened yet. And in fact, silver investment is largely an American phenomenon. If you look last year at the 2023 numbers, the US was half of silver investment demand. Now, you had a lot lower figure for the US this past year in the numbers that just came out, so it dropped to a third, but still, in fact, I was just down in Argentina where they had hyperinflation several times. Buying gold and silver is not a thing like it is here in the US and Canada. So the main investment driver in the US is retail, and last 2 years we've had a lot of selling. So in short, or maybe in long, but that's hopefully shedding a little light on why we've seen the divergence. And now, could that change? Could we see a shift if gold keeps rising? I would certainly think there are groups out there that are looking at, silver looks a little low here, and then we can dig into, do we get to a break point due to the deficits? And
yes, well, I was going to bring that. I think you'd said last week in a video that this is the 6th consecutive annual supply deficit. Is it 6?
I think it's, well, they have two numbers. They have with or without the money, the ounces that go into the ETF. So I think it's 4 without the ETF, 6 if you include the ETFs. And to the degree that I understand it can change, people can unwind those positions. But if the metal had to go in there, at least as of the moment, and I think it's 6 years on that.
And I don't know if you could talk too much about your trip to Argentina, but that's pretty cool. But you were looking at, and you don't have to mention names at all, but you were looking at actual mines. Is that correct?
Yeah, we went down there to see Fortuna's Lindero mine, a big gold mine that they have down there. And as I know is really your field of expertise, Andrew, but certainly gives you an appreciation, seeing it up close, what goes into bringing some of these metals out of the ground, why it's not the easiest business to be involved in, although certainly when you're able to figure it out, which I think Fortuna is certainly, especially with what they've done in the last couple of years, demonstrated they have a handle on that. And next week they'll be releasing earnings when you have gold above 3,000 for most of the quarter. So interesting, great trip down there. Although that was one of the things I asked, though, is there any gold? You don't have, I mean, maybe there's a couple local coin shops, but I mean, in general,
it's not their big thing. Yeah, like it is interesting to see like a company like First Majestic who's like printed their own coins, which is a very different strategy than someone else who's just selling the ore.
Say that last part again, please.
Or than someone who's just shipping ore to be processed somewhere else or to be used industrial.
Yeah, Fortuna was not. I didn't see that part of the operation of what they're shipping, but yeah, and I think you referenced First Majestic and how they're going direct. So
well, they've got they have coins that they've printed. They have that their own First Majestic coins, which is interesting.
Yeah, well, they opened their mint in Las Vegas. It's over a year ago now, maybe 2 years. But yeah. I know that's one of the things they've wanted is to take more of the silver that they're mined and go direct. So there's, as I know you're well aware, a lot of people who aren't thrilled with the pricing system that we have, where whatever the Fed does on a given day can often impact that. Although yeah. We're seeing a lot of these things shift in the same way we're seeing volume shift from the COMEX over to the Far East. So it's certainly an exciting time for especially people who've been sitting there watching gold and silver for a long time, wondering, all right, well, this should happen one day. And we're seeing a lot of those things happen now, which is alternatingly startling or disconcerting.
I know.
If you can, and hopefully that's what people like you and I do, Andrew. So at least let people see what's going on out there so you can be prepared and at least enjoy the theater of it all somewhat.
I mean, yeah, it's any given day now where you're just wondering where things are going. Although for me, when I look at something like the precious metals, is I feel quite confident, despite the volatility. If someone just sits back and goes, I think there's still room for both of them to do well. I'm like, yeah, just don't look every day, unless your job is that you're a trader and you're looking every day. So we feel confident in that. When you get into more of the mining, that becomes, as you mentioned, a whole other level of challenge because how many mines are going to get developed in North America that we would like to see? I don't know. That's a big conversation, which is messy.
Yeah, well, especially it's interesting. We hear the silver deficit been between 100, 200 million ounces for a couple of years now, which sounds like a lot. But to put that into context, they also have a table in the silver survey, shows the top 20 companies that produce the most silver. I think First Majestic is somewhere in the teens, and they had around 9 million ounces. That'll go up because they had their deal with Gatos Silver, but as you get down to the bottom of that 20, it's not like, you had the last couple of companies were doing 30 or 40 million ounces each. So maybe they each bump up 10. And I mean, you're getting down to company, the bottom of that list, it's like 5, 6, 7 million ounces, somewhere around there. And those are companies that are already in production. So if these deficits keep on, now people often say, well, how come it hasn't been impacted in the price? Well, first of all, I mean, we've gone up, we're at $18 2 or 3 years ago. So we're almost up 100% from there. I know everybody's yes. $50. I'll be excited about that too. But it has moved, yet I don't know. I imagine that this could sit there for a while. And what's prevented that from being a more serious issue is that the stockpiles have declined. They're not at zero yet, although... Can you say that we are definitely going to have a shortage? No, I think of it as there's some time in the clock. Maybe you're in the third quarter, but if you could sit there and say, all right, what would be the ideal conditions if aside from real world applications. But if you wanted a shortage in the silver market, I mean, all right, we're running a deficit. Oxford Economics did a paper, projected industrial demand for the next 10 years. I think they said they expect it to go up 46% over the next 10 years. So that's not slowing down. Hit another record this year. It'd be one thing if you had all hands on deck in the silver mining industry, but most companies still aren't getting capital to move projects forward. Of course, there's the time lag.
Yeah.
So, and I might add, this is with retail, as I mentioned before, largely sellers over the past 2 years. So if that stops and they start buying, and you add that on, which has not happened yet, to be clear, but you would think, especially given some of the dilemmas facing the world right now, that, it's not just me saying I think interest rates are going to be lower. The futures market is saying it. Even the Fed governors are saying it. So at some point, if you get a switch of retail from selling into buying and add all that on, you're certainly have the conditions in place that if this goes long enough or gets exacerbated, or if there's some sort of chaotic event, which reminds me of how Goldman recently mentioned, well, we could see $4,500 gold in an extreme tail scenario. And I'm thinking, well, when I'm looking at the headlines of things going back and forth based on these tariff policies and thinking we may be in that extreme tail scenario now. And again, so are we guaranteed a shortage? No, but at least is it on track if things don't change? And are there very few signs to point to that they will change? I think that's fair to say.
I'm going to put on my tinfoil hat for a second as well, and we'll kind of ease into the manipulation market, which isn't tinfoil hat, but could you make the case, like we're talking going from 18 silver to where we're at today, which is awesome. Now, like you said, one could argue the amount of news and stuff, you'd think it should be higher, but do you think that there could be behind the scenes a shadowy figure saying, slow this down a bit? Like there's so much news hitting. We need to draw this out longer term rather than having spikes up huge. Is there any argument to be made for that they're kind of foreseeing there's a rocky road ahead? If we could try to smother it a little bit, and while it's going up, ease into it rather than just boom, it shoots up like it did back up to 50 back in the day.
Well, I will say that it was intriguing that a couple of days after Robert Gottlieb, who is a former JP Morgan precious metals managing director, he was commenting on something that, Andrew, I know you get our Substack, so I think you may have seen this, how the bank short position had almost touched the record from 2016. Robert mentioned one of the banks may be very exposed, and then a week later, that's when the reciprocal tariff announcement that it wasn't a complete surprise. It wasn't like the market was shocked and blindsided, yet at the same time, one bank may be exposed in his words. Then you had silver go from 35.49 to a sub 28 print within a matter of days. So, yeah, the banks short contracts, and certainly we've talked about that plenty, yet there was something else you said before that. One of the assumptions, perhaps, you mentioned that silver should be higher. Well,
yeah.
Should it, or it depends how you look at it, where,
yeah.
I love silver. We talk about silver on the channel. I own a lot of silver, yet also we're not on a silver dollar right now. You could argue that we should be, or we'd be better off, and that's fine. Yet, so it's not like, well, they just stopped QT or they cut interest rates, so silver has to go up. And here's the other thing is that should it be higher or lower? Right now, the main investment market is selling it.
Yeah.
So you could say that you think people should be buying more, yet, and this gets to the heart of why people are, and I've not trying to say other people, but what I've wondered about for the past decade, where, okay, the silver price hit 50 in 2011. They kept interest rates at zero for a decade. They were still doing quantitative easing for a long time after that, and then continued doing it. So what's going on here? How come it didn't go up. Yet this is where you have to understand whether we like it or not, the combination of the COMEX and supply and demand. So to put that in context, let's say the Fed comes out, they go to negative interest rates tomorrow and quantitative easing, and the silver price is an extreme example. We'll say it goes up to $200 an ounce.
Yeah.
Now, if you don't at some point have people actually buying additional silver, then just by market supply and demand, I mean, if you had $200 silver, you're going to get a lot more production. So one of the things that was absent, and if you want to say that the banking system or other financial media tries to kill interest, or when there were some price smashes, is that sometimes the intention behind that to get people to throw in the towel, say, all right, I'm done with this stuff.
Yeah.
You can handle that. Yet at the end of the day, you haven't had that investment demand surge yet. We've seen signs of that in the ETFs in the past couple of months. It was interesting. I saw Michael D'Arienzo of the Silver Institute. He did an interview on India, CNBC, and the woman there mentioned that as the gold price has gone up, that they're seeing signs that interest is turning to silver. So things like that would make a difference. Yet the big disconnect is that, now that's not to say that if the Fed does go to QE and 0% rates, I mean, probably silver will go up. Yet underlying all of it is that you have not had a surge in demand in silver. Now, that's half right. You've had the surge, but it's in industrial, and it could well be that maybe you never get the surge. Now, I don't think that will be the case. Maybe it doesn't come from the investment standpoint, and industrial is sufficient, and that could be what happens. We'll see. But in terms of why it hasn't happened yet, why silver isn't keeping up with gold, why silver performed the way it did in the teens, hopefully that puts some context on that.
Yeah, and overall the bigger context too of like the U.S. dollar and Trump coming in, like kind of saying you're not going to create some sort of alternative attack on the U.S. dollar, and that narrative of like BRICS and buying possibly gold and silver as to commoditize or create some sort of secondary currency backed by what do you think that narrative, although it's died down a bit, do you think that is playing into this at all as well? Like people kind of saying, well, wait a second, like, is that going to move forward, or does it even strengthen it to some degree that, okay, we have to quietly stockpile this stuff even though Trump's saying no, like don't attempt to come off the US dollar?
Are you asking if some are backing off because they haven't heard news or don't know whether there's going to be a fallback unit?
Yeah, that unit, there's a whole kind of push. I was, quite interested and excited about this, but it's died down. I would not suggest it's ended or that it's just not going to happen. But I'm just wondering if you think that narrative or that kind of angle has any impact right now as well.
Oh, I don't know. I mean, maybe when there's news about it,
yeah,
that could bump it up. I mean, I can't imagine that there are many people outside of you or I, or people watching this, that are factoring in what may or may not happen with the unit, and that's why they're not buying. And in fact, Pepe Escobar, who's been one of the main ones reporting on that, I did hear an interview where he did give a timeline. He was like, this is something conceivably around 2029 or 2030 when it could be implemented. So I know a lot of people were disappointed because you had the summit in Kazan and nothing. Well, that wasn't even true that nothing came out of it. I mean, they put on the darn BRICS-Pay website the link to the unit white paper and called it topic under discussion. So
yeah,
I get what you're saying, though, that it's been quieter over the past couple of months. I don't know that means that initiative or the motivation for such an initiative has gone anyway. I mean, you could say, I mean, it's clearly in a more divisive climate now than then. And also, China did announce, it was about a week ago, they were encouraging state-owned businesses to use yuan in international payment. They also mentioned they're expanding the Shanghai Gold Exchange warehouse system.
Okay.
One of the things cited was to continue the internationalization of the yuan. So there are signs out there, and I mean, it doesn't take a rocket science to know, like, oh, well, if this is going on with the trade war, that if they were thinking about having alternatives before, they'd certainly be thinking about it now. And in case they weren't thinking about it yet, Andrew, would you like this? This is a stunner that I only saw recently. I'll bet you haven't heard this one. Can I lay it on you now?
Oh yeah, bring it on.
It was weird. Last week there was Trump put a post on his Truth Social saying, "Hey, we're heading over to Ukraine. I think a deal is close." And I'm not sure exactly what happened, but by Saturday, he was saying he was pretty upset with Putin. And he's like, this guy's just stringing me along. Maybe we need to take some sort of banking or sanction related action.
Interesting.
In terms of particular events that could change market pricing, I mean, that would seemingly be at the top of the list because remember when Trump was campaigning, he's like, hey, we'll make a call. The thing will be over in a day. And certainly was something that impacted my decision making. And not that I thought that was ironclad, yet wasn't going well with the previous administration.
Yeah.
One note on that, I did see a story. He said, well, I was kind of joking about that, which I'm not sure how that one sits with me. That doesn't seem the right place for such a thing yet.
Yeah. Well, here I'm going to put
all that aside, though. If we saw what happened when the sanctions were placed on Russia last time, and we saw that's exactly when central banks started buying gold. That's exactly when the correlation between the gold price and interest rates that had held for however many decades broke, and now the gold price goes up regardless of what interest rates are doing. So if that should, I mean, even the fact that they're discussing it certainly is a wide divergence from the plan we were on, where it seemed like maybe we're heading towards an end and we're going to see working out the terms. Hopefully this is a temporary setback for the good of the world, but that was a bit eye-opening to hear. That may be a possibility.
It's interesting, and this is me once again. Maybe I'm putting a bit of tinfoil on, but the timing-wise, with Tucker Carlson having the guys from the Wagner Group on, so I don't know if you saw that. He just interviewed them yesterday, the day before, and I thought, they're no big fans of Putin. What? That's interesting. He has them on. What are they coming on? What's their message right now? So very interesting guest to have on. And I think he was also on Sean Ryan, who I really enjoy. But definitely a controversial guest. Yeah. I mean, it would be interesting to talk to the Wagner Group. The lead guy who was Putin's cook at one point, he got killed, back was a year and a half ago. So it's interesting if I put the tinfoil hat on, the timing of having the Wagner Group on discussing their dislike for Putin and whatnot. I just find that a little bit interesting.
I didn't catch that one. I'm sure they would have quite a perspective.
Yeah, they would. Yeah.
Although speaking of timing, did you see that video that came out yesterday from the Chinese government basically saying we will not back down and we will not kneel down to the U.S.? I mean, it was quite theatrical and like hitting all of the sensitive issues, basically trying to rally up support in the international community. Fascinating the way you're seeing war being waged in different methods. And I was reading on Bloomberg, I'm not sure, I can't say this exactly how it is yet. That's what Bloomberg was suggesting, that people even who were anti-Xi Jinping have rallied behind that. And I've seen a couple data points that at least what's coming out of there, that they're not close to backing down, and the people are supporting that. And it's
very interesting. That geopolitical thing is very strange. And of course,
having its impact on the supply chains, I continue to hear.
Yes. I mean, what do you think as far as monetary policy then? Because I mean, there's some control there. You see a bit of fight here between Jerome and Trump, but we all see that. You think rates are coming down? Is that so? You're saying the market is pretty much indicating that. What what are some other things that could be beneficial or help in the near term as well? If people are kind of saying, well, what are some of the indicators I need to be paying attention to right now because there is a bit of volatility?
Well, certainly the dollar index is one to keep an eye on because it's played out exactly as it did last time, where you had this big spike in the dollar index with Trump coming into office, and it was fascinating. You saw it coming this time as well. I think, what was it, 95 around June or so? Or no. That was the one in 2016 where it went from 95, shot up to 103 after Trump was elected, and then a year and a half later is below 90. So here we had the dollar index was just under par right before Jerome Powell did the 50 basis point cut, shot up to over 110, and then has been sinking like a stone ever since then. And if I may, I mean, Andrew, you may have seen it. We did write about this one in advance where Trump's getting elected. Everyone's saying, oh, well, the dollar's going to rally, tariffs, strong dollar policy. And I remember thinking and writing back then, well, all right, that sounds great, but it's one of these things where, if you move this, everything else stays the same, then sure. But the problem is when you move this, a lot of other things change. And to say they're doing tariffs seems like one thing, but when that actually gets implemented, I wondered if we wouldn't have a much different tone. And certainly that's where we've ended up on this one.
Well, yeah, definitely the interconnectedness of everything. I mean, the complexity is off the charts. So even attempting to pull away and not even decouple, but and I mean, I'm a vocal advocate of the West, and that largely being the U.S. and as a driver, having a complete supply chain to silver, critical metals, you name it, processing, even doing it here, processing here rather than China, trying even by having a tariff or anything, trying to start that process. The number of ramifications. I mean, my brain hurts to think because of the interconnectedness of everything. It is fascinating, but it's also it's a brain freeze.
Yeah, well, one of the parts that seems to have gotten left out, which you just touched on, was that the supply chain. I mean, it's one thing for you and I or Trump and whoever to say we're going to tariff this, tariff that, yet there's an impact that has been felt. I want to be careful how I phrase this. I can't guarantee, but internally I continue to be quite concerned. I've heard the phrase empty shelves this summer getting repeated more often. Hopefully it doesn't get there, but at least my own thinking and planning, realizing that is becoming a possibility, especially the longer that this goes on. I mean, we've already seen the shippings from China to the U.S. ports has dropped significantly.
Yeah.
And it's not hard to find, company executives talking about the conditions they're facing, and one after another, it does not sound good. So that would be another one that certainly I would, even aside from the finances, just for your own life planning, I would keep an eye on over these next couple months.
Yes. I mean, we deal some of the narrative as well as like with our new PM Carney saying, we're going to find other trading partners other than the U.S. And I kind of go, wait, that is the trading partner in the world. Really, at the end of the day, you have to and want to be trading with the U.S. and saying
you need us to buy your stuff on credit.
Like it's. I mean, it's nice, I guess, talking point, way to go. But everybody in the right mind says, I want to trade with, I want to make something and sell it to the U.S. Hopefully they'll buy it. I mean, that's basic kind of stuff.
Like that old saying, if you owe the bank $1 million, maybe you have a problem. If you owe the bank, $1 billion, they have a problem. So, it's a fascinating dynamic. And now we're watching the stare down to see who blinks first.
Yeah.
And sad part is that not helping people in either country right now.
No, that's the other thing I was going to say. I mean, I like the narrative of a stronger West, but when you look at some of the, I look at, say, China, not everyone even knows that they're a communist country in China. So many of the people would be like, I don't know what kind of country they are. I'm just told I work hard and I do this. And they're getting hammered, like the average person. I don't mean someone who's in politics or Xi or the overall tenor of the country, because they've been used to we're just shipping tons of product to the U.S. they're struggling as well. Like no mistake, like it's not like things are rosy. As we all know, China has a number of major like between shadow banking, between their developments, land developing kind of projects. They've had a lot of issues, and right now this would be hurting them significantly.
Yeah, it's not good.
It's brutal. Okay, so listen, we could go on about this forever, but what do you think are some short-term things here, just so we can wrap it up? Some of the indicators coming out. I won't even bother asking about the way we talked about trade, but trade policies. Who knows? We could hear something tomorrow to change the next day. So that is probably adding to the volatility. But what do you think are in the short term here? If someone says, "Okay, I'm looking for another entry point, another exit point, possibly if they're trading silver actively, or what's your overall kind of thought pattern in the next 3 to 6 months?"
Well, I guess the main thing is I would expect continued volatility at higher levels, like we've seen. I'd like to warn people often, especially when you see some of those days where the gold price is up to $100 2 or 3 days in a row. Be prepared that as great as it feels and as much dopamine is flowing through your brain at that moment, there are going to be sell-offs. With the reciprocal tariff announcement on April 2nd being the best example. The gold, I think, went from been over 3,300, went below 3,000, and then was up at 3,500. This time it was a very short time afterwards. Obviously, we don't know the length of all of these, but it will help to be prepared to expect those types of moves in both directions, especially in the months ahead. If you are short-term trading this, then by all means, I would say direct your questions to Andrew, because we'll expect you to know what's happening tomorrow. Although if you're owning physical bullion or investing for long-term, I would say that it helps to think about it a little bit beforehand. All right, if there is a sell-off, how will I respond? So rather than wake up one day, the gold price is down $100 and you're have the emotion flowing through as well. But be prepared for those types of moves. And, it's in the end. Oh, yeah, that was the other part I wanted to add on here. Just 10 years from now, do you think the price of gold or silver is going to be higher or lower? So I'm not saying that's the only parameter for your trading decisions yet. Keep that in mind. Obviously, if you have physical, then you have significant transaction costs on both directions. So you want to be trading that as infrequently as possible. Yet when the price goes down for a couple of days in a row, I don't think you need to panic wondering, am I just completely wrong about this? But take that step back. Obviously, I know the Fed said that despite not being able to get core CPI below 3% since April of 2021, and in their own projections saying that inflation is not going to get back to 2% until another 3 years from now, despite the fact that they're going to be lowering interest rates along the way, the costs of mining are going to be going up, let alone a whole bunch of other things that we've discussed here. So I think that 5 or 10 year question is a handy thing to keep in mind.
I like that bigger macro outlook because, like you said, as much as we desperately need pick a commodity, more mines coming on board. If you have a new discovery and you're building a new mine, that's expensive. Like if you've got an old one, you can expand. Okay, kind of expensive, but not the same thing. And they have to come online, as far as I'm concerned. Like if they want to hit any metric of building out the level of power that's going to be needed, assuming they're doing any transition. And even if you say they'll put the transition on pause, it's a ton. And does that support a higher price moving forward anyway? Because I would think so. So in any event, you get the last word here. What's your thoughts? How should we leave this this silver discussion?
Well, just thank you for having me on. It's fun to be on your show and talk about these things. Certainly a bit, I don't know if it has to be confusing. I mean, obviously there's a lot happening quickly, especially with the way news is disseminated now, yet I'm guessing that most of the people watching this today have been looking at some of these things for a while. So hopefully there's that part that you can enjoy having seen something in advance and being prepared for it. There's a part of it that's fun and exciting to watch. And anyway, just fun to hear and talk with you about it today.
It's that kind of situation where you said it before, where it's painful sometimes to be in that volatility and the chaos, but at the same time look back and go, I've been talking about this for a year and it's happening. I mean, or for years, it's happening. This is happening. And also having a lot of, social, political upheaval and so much information out there, but at the same time, like the silver is doing great. So it's that mixed feelings of emotions on any given day.
Well, yeah, and I suppose a lot of life is like that, but that's why I think a big part of investing in gold and silver is that we're an emotional bunch. So, and I've had my years where whether silver was up or down was how my mood was that day, and I'm glad that I've been able to get away from that. You have, at the end of the day, it's a piece of metal, so putting it right in the right context certainly can help, because it's not been as straightforward as I think many people were expecting. Certainly not me back in 2009. That path would be like it is. Yet, if you can, getting the emotional part in the right context, I think you do that before you do anything in life is usually going to be pretty helpful.
Excellent. Well, we'll leave you at that, Chris. Always appreciate it. Thanks for all of your knowledge. We're going to get this out to as many people as we can. Have a great day, and we'll chat real soon. And check out your Substack. If you haven't already subscribed to it, Arcadia Economics on Substack, go check it out. But like I said, most of you know who Chris is. And if you haven't, we're going to get this out to you as well. So thanks again, Chris.
Thank you, Andrew. Appreciate it.